What's up, dude? I want to give you a quick breakdown of the FOMC day. So I'm going to start you on the daily chart. Okay. Um, if you remember back from our text, I had mentioned this volume imbalance here. Um, this was last month. We were texting, or a few weeks ago. Right here, you can look back. But I said October's 10th was the draw on liquidity. That's this low here for our little pullback. And that we would have the volume imbalance that I mentioned right here to contend with to get up to it and through it. So you can see we have delivered that right here. Okay, so we swept lows here. That's the manipulation. This whole move down is the manipulation. And we run right back up, and you can see we tap it here, and then we spend a good week plus kind of consolidating in it, right? So we get up through it here on Friday of last week, and then we spend 2 days wicking down, and today wicking down. But all of these closes are above 50%. So ideally, we have all-time highs here. Ideally, if we're going to remain bullish, we would like to see the upper half of this volume imbalance support price on a closing basis. So we can trade back down. I would not prefer to see it get below consequent encroachment. That's halfway. We can. But it's ideal if we stay in this upper half, and this is used as a springboard to eventually send us higher to close out the year and or to start out next year. So this is on a daily perspective. So we are bullish. We have bullish PD arrays being respected. We have an order block here. Okay, down close candle. Right here is an order block. Okay, and we have price trade down into the order block and reject higher. That's bullish PD array number one. We have a BISI right here, and you can see we respect consequent encroachment of it and sends us higher. So we are respecting bullish PD arrays. We have an inversion fair value gap right here that we have respected nicely once we've gotten up through it. Back down, upper half is supporting price higher. So all of these bullish PD arrays are being respected and supporting price, which gives us a bullish bias. So I'm going to drop us down to the 15-minute chart, okay? And you'll see that I have, the white shaded area here is the daily volume imbalance. Wanting to bring your attention to this low right here, which was yesterday's daily low. Okay, so if you notice, how TradingView has the blue shaded areas and the white shaded areas. The blue shaded areas represent after hours trading, electronic trading hours is what they call it, and then the white shaded area reflects basically the stock market's open, the U.S. stock market's open. So it's 9:30 a.m. Eastern to 4:15 it goes to, and then at 4:14, and at 4:15 it goes to electronic trading hours. So I say that just to say it's a good indicator to show you where the session liquidity is. So if you see this low right here is Tuesday, December 9th, that's yesterday, the New York sessions low, which is essentially the daily low. So why is that important? Well, I'm going to break this down to a 1-minute chart now and get this off the screen. So we have yesterday's right here. Here's yesterday's low, and here's all of yesterday's price action. This is on a 1-minute chart. Okay, just a slow grind, very choppy. Not a ton of entry points in this choppy mess. Overnight, this is Asia session into London session. So overnight in London, you can see we manipulate this high, which is yesterday's New York session high, right? We're in the white shaded area, so this is the New York session. This is the high of day for New York. And in London hours, around 3 a.m., we trade up, we sweep that high, we manipulate, take that liquidity, and then we sell off. Now, what's to note here for FOMC, which released at 2 o'clock, you can see the 9:30 open is delineated again by the end of this blue shaded electronic hours and then the white shaded regular hours. So this line of delineation right here is 9:30 a.m. That's the stock market open. It's when a lot of volatility comes into the market. So we open up, we sell off, we run a little bit higher here. Notice how this sell off here, right, at the open, stops short of what? Yesterday's low right there. That low and that low. That is engineering liquidity, okay? So we stop short, we run higher. We sell off, we stop short, we run higher. We sell off, we stop short again of, again, yesterday's low. We make one last attempt to go higher. And then right here, and you called this in the text, when we were texting, right around 10 or 11 a.m. is when the setup formed. So whenever you're bullish and you see a previous daily low or a previous session's low get swept and you're bullish, you should begin to look for setups, okay? So this is a clear-cut model 2022 that ICT teaches, okay? We have this high to this low that sweeps yesterday's low right here, okay? This little bit of price action right here, this is all manipulation and accumulation. This is smart money accumulating long positions down here. Everybody that had their sell stop right below here, smart money was buying all of those sell stops, okay? So you can see we have a high here and we trade down. That's our manipulation leg. When we trade higher to here, a break above this, and this is 2022, right? This is model 2022. A break above this after a sweep of a low is a market structure shift, okay? So now we have a range from here to here. We accumulate and consolidate right here. Now we're not doing anything in here, right? This is a textbook trade setup. I did not trade this because it was before FOMC. So, it's not advised to trade this, but I do want to show you the algorithmic theory behind why price did what it did, right? So, so we have a market structure shift here. Now this is model 2022. Now we want to trade back down into midpoint of this range, right? If you measure from low to high, the 50% mark aligns with this BISI right here. That candle to that candle. Boom. There's your entry. And it just so happens to be the 2 o'clock FOMC candle. The 2 o'clock candle was when the news was released. I'm gonna put that back on here, and I'll just do this dealing range. So we have a dealing range here after liquidity was swept right here, and we have a market structure shift above this high, right? This leg right here from here to here confirms that the algorithm has gone from a sell program to a buy program. So right up in here, right, when we break above this high, we are now in a buy program, okay? The algorithm is shifting from a sell position to from a sell program to a buy program, okay? It does not matter how many people are trying to sell short into this. It does not matter. The algorithm is coded now in a buy program, okay? This is equilibrium of the range, right? Anything above equilibrium is a premium. Anything below is a discount. So you want to see for model 2022, after a shift in structure, a trade back down into at least equilibrium. That's this orange line right here, which aligns perfectly with a BISI, buy side imbalance, sell side inefficiency, right? And then it's off to the races. What's the target? What's the high of day, right? The target that we went to go sweep is, or was, the high of the week. This is Monday, and this is Monday's high right here. If you go back to a 15-minute chart, it's a little bit clearer. This is Monday's price action right here. And if I take that up, this is the high of Monday, which is the high of the week, right? Now we have a new high of week, which is this high here. But during FOMC, our target was the high of week, which was Monday. So we came down at the FOMC release, the news release, right? Doesn't matter what the news was, right? The news is just an excuse for manipulation. At the news release, we sell off and we sweep yesterday's daily low, and we run immediately and aggressively for our current week's high, the weekly high. Okay. So again, this is textbook model 2022. Okay. We have a high, a sweep of liquidity, a break of structure, so the market structure shift, okay, and then a trade back down into a discount PD array. This is a discount array. This BISI, buy side imbalance, sell side inefficiency. It's a discounted PD array because it's in a discount of the current range. Okay, so the one other thing I wanted to show you, and I asked you if you learned breakers yet. I'm going to show you what a breaker is. A breaker block is one of the most, if not the most powerful of ICT's PD arrays. And it occurs, it's very similar to Model 2022. It's got some differences though. The candle formation, the pattern formation that you want to see is you want to see a swing low, then you want to see a swing high, then you want to see a lower swing low that sweeps this low and all the way back here, previous day low. It does not need to be a daily low. In this case, it was. But the pattern is a low, a high, a lower low, and then a aggressive move higher. So a higher high. So it's low, high, lower low, higher high. When you see that pattern form and occur, you go back to the first swing high right here. This first move, low to high, and you take the consecutive up close candles. One, in this case, it's three. It's not always three. Sometimes it's just one. Sometimes it's two. In this case, it's three. Okay. From low to high, you take the last up close candles. If they're consecutive candles, you highlight them all. So it's 1, 2, 3. And you draw that out in time. This is the ICT bullish breaker. This is a breaker block, these three candles. Okay. And you can see price comes down, trades into it, trades into it, trades into it, trades into it. And this is the news release. And preceding the news release is just consolidation, which is very normal. The engineering of liquidity down inside of the breaker, right? So at 2 o'clock when the news releases, we have a little gap here. It gaps up, it shoots right down, and it sweeps all of these lows in this discount BISI, in this ICT breaker block. It does not need to go below here. Why not, right? Why did this low stop right here and not go down below this low? The answer to that is because this low already did the damage. This low already did the manipulation. The manipulation was done at 11:03 a.m. Okay, that's the low of the day. This right here did the damage. Everybody that was long from yesterday trying to hold into the print today had their stops right below yesterday's daily low. So at 11 o'clock when we sell off and we sweep these lows, this is the manipulation of the day. Okay. So we have multiple PD arrays forming, right? We have a low, high, lower low, higher high that confirms this leg of price as a breaker block, a bullish breaker block. And We have a model 22 with a shift in structure after a sweep in liquidity and a trade back down into discount of this range, a discount PD array right here, which is a 1 minute BISI, buy side imbalance in the breaker block after sweeping lows during the news release. Fill it all the way in, run up, come down, stop just short of it, run up, come down one last time for good measure to sweep anybody that was under here that had already been long, and then it's off to the races. And again, the target is the high of the week. Okay, so the breaker block itself is the most powerful PD array in the arsenal that he's taught. I trade this daily. This setup happens almost every single day. If not every single day, it happens multiple times throughout the week. My suggestion would be to learn it. I can help you learn it. It's pretty simple. Once you see it and learn it, it's hard to unsee it. It's just a simple low, high, lower low, higher high, and then a trade back down into the however many consecutive up close candles there are. If it's 3, sometimes there's only 1, right? And it would just be the top one right there. In this case, because there are multiple up close candles, you take the consecutive up close candles and you highlight all 3 of those and you extend it out in time, and price is held inside of this breaker block. And then you can see right here, one last time for good measure before the real move of the day occurs. This is the real move of the day. That's the bread and butter. Again, not a tradable day, in my opinion. I got long this morning in here. As I woke up, this low right here had swept Asia's low right here. I took a trade in here, and I was able to get out pre-market, and then I was done for the day. I was traveling. I was up in New York. So I took a pre-market trade. That was it. And then this, I'm just going back into my chart now and kind of reviewing the day's price action and how it went. But overall, it was a very textbook day. I'll be honest with you, I don't love this. I don't love this price action here. I would have wanted to see more expansion, but we'll see. We'll see what happens. We also have this premium SIBI, sell side imbalance, buy side inefficiency, that we're going to have to contend with. So we're going to. This will likely be the next draw, right? At some point. And, we'll have to get up through this, through it, and then support price exactly like this volume imbalance is reacting. The last thing that I would note is if you go onto, a 15-minute or an hourly chart, this little wick like this, that's not really enough for me, especially with this high right here. These are relatively equal highs. That just barely touched it. That to me is not enough. Like this should still be a draw. You have these equal highs up here. If you look at the one preceding from Friday, this is Friday's weekly high. We barely tapped it here. And then we have on top of that on the daily chart, we have this volume imbalance or this SIBI, sell side imbalance, buy side inefficiency. So this is likely the next draw on liquidity. Again, I would prefer to see price remain in this upper half and then propel higher. We also have this wick. I know you started watching some of the videos on his wicks. You can grade this wick here, and if you go down to a lower time frame, you would want to see essentially price remain in the upper half of the daily wick, which also lines up with consequent encroachment of the volume imbalance. Notice that, right? We have 50% of this white dotted line, this consequent encroachment of the volume imbalance, and 50% of this wick right here are the exact same, right? I'm just realizing that now. That's not random. That's algorithmic. Okay, so that's confluence. This should hold us it would be my preference to see the upper half of this wick right here. And look, we can do that by taking this off and say, if we bold this a little bit, we want to see price remain up here and then propel us higher into this SIBI. So that's my narrative for tomorrow. My bias remains bullish. My narrative for tomorrow would be to look for something, and we may get it overnight, right? Where we, if we look down here on the 1 minute or so, we could even honestly, we could do another tap of this breaker and then go. That wouldn't be out of the norm. But I would want to see this right here, this low that was put in today, to remain very bullish. I would want to see this stay in place and be the low of the week. Okay. Low of week right here at this low. So that's how I'm looking at the market. Let's do something 15 and below. Okay. So I would want to see this be actually, you know what I'm going to do? I'm going to go like this. Low of week. Okay, so I would want to see this. Again, if we're going to remain very bullish, ultra bullish, I would want to see this be the low of week and price remain in this general region before going higher and getting expansion. All right, I'll talk to you when I talk to you, man.